We've hit the weekend mode and we're back with your one-stop corporate show, Companynama. I'm Shrestha Tiwari. What took place this week in the startup world and the corporate world? We'll find out all of it. First, over to the week's corporate updates. Sun Pharmaceutical Industries have said that it has proposed to fully acquire Israel-based Taro Pharmaceutical Industries through a reverse triangular merger. The Mumbai-based drug major has said that it has issued a letter to the Taro board with a proposal containing a non-binding indication of interest to acquire all of the outstanding ordinary shares for a purchase price of $38 per ordinary share in cash. Sun Pharma currently owns a 78.48% stake in Taro. The purchase price represents a premium of 31.2% over Taro's closing price on May 25, 2023, a 41.5% premium over Taro's average closing price in the last 60 days, and a compelling liquidity opportunity for Taro's shareholders. Under the indicative proposal, post the acquisition, Taro will become a wholly owned subsidiary of Sun Pharma and will be delisted from NYSE. Abu Dhabi Investment Authority is in talks with Aditya Birla Group. These talks are related to investing around 1,200 to 1,500 crores in Aditya Birla Health Insurance, a company related to the group's health insurance business. According to the data of insurance regulator IRDA, Aditya Birla Health Insurance is one of the 5 most active health insurance companies in the country with 14% market share. Apart from ADIA, select sovereign wealth funds or SWFs of the world are also interested to buy stake, for which talks are likely to start in the coming few weeks. SWFs are eyeing to buy a small stake in Aditya Birla Health Insurance through this deal. And the country's third largest telecom company, Vodafone Idea, which is struggling with the lack of funding, last week had indicated that talks to raise capital would go ahead, but analysts believe that the new capital may come in the form of debt instead of equity. In fact, according to analysts, investors are afraid that after the moratorium on regulatory dues ends, equity dilution means that their equity share may decrease. In simple words, analysts see the government's dues being converted into equity twice. Estimates are going on continuously, and if investors take equity stake in the company now, then there may be a reduction in their share when shares are issued to the government, which is called equity dilution. Let us also tell you that in September 2025, Vodafone Idea's moratorium is ending, after which Spectrum and AGR dues will have an annual liability of 43,000 crore rupees and will have a gap of 30,000 crore rupees. HDFC Life Insurance shares rose on Wednesday after UK-based Aberdeen, formerly known as Standard Life Aberdeen, sold its entire stake of 1.66% in the Mumbai-based life insurer through block deals. Aberdeen sold 3.6 crore HDFC Life shares at 565 to 585 rupees per share on Wednesday, making the transaction worth about 2,010 crore rupees. According to some media reports, HDFC Bank, India's largest private sector bank, will acquire the entire stake of Aberdeen in HDFC Life from its joint venture partner. In the past 1 month, HDFC Life shares have gained 9% after the RBI allowed HDFC Bank or HDFC to increase their shareholding in HDFC Life and HDFC Ergo to more than 50%. Several corporate giants on the radar this week. We'll find out which one are those. Go first, and Adani also being one of them. In the latest, Adani Group, a company Adani Roads Transport, on Thursday terminated yet another proposed acquisition and said that it will not be going ahead with the acquisition of 4 road assets worth 3,110 crore rupees from Australian investor Macquarie. ARTL have agreed to buy 100% stake in Swarna Tollway Private and 56.8% stake in Gujarat Road and Infrastructure Company. Further, GQG Partners has said that it intends to buy more stocks of the Adani Group. GQG Partners, which invested $1.87 billion in 4 Adani Group companies in March earlier this week, had pumped in another $330 million to $530 million into these companies. In more news, the Adani Group is planning on acquisitions as a way to augment capacities in ACC Ambuja Cement, in addition to the existing strategy of expanding through organic means. The ACC Ambuja Cement Combined said that it has planned to double capacity to 140 million tons by FY28 with a total capex of around 46,000 crore rupees. Meanwhile, auditor Deloitte flagged 3 transactions, including recoveries from a contractor identified in the Hindenburg report, as it issued a qualified opinion on the accounts of Adani Ports and Special Economic Zone. The Delhi High Court has ordered low-fare airline SpiceJet to pay 380 crore rupees to its former promoter Kalanidhi Maran of the Sun Group and has asked it to submit an affidavit of assets within 4 weeks. The ruling is a setback to the airline, which had surprised with a 4-fold increase in earnings to 106.8 crore rupees in the December quarter and comes amid a battle with aircraft lessors over payments. The High Court ruling on May 29, 2023 originates from a long-running battle between the Maran family and the current promoter Ajay Singh and SpiceJet over contractual obligations. Maran sued SpiceJet in 2017 for allegedly causing losses by failing to issue convertible warrants and preference shares to him and his Kal Airways. Vedanta Resources has raised $450 million from 2 of its rivals to repay its debt. The company raised $200 million from Trafigura Group and $250 million from Glencore. Earlier on Wednesday, Vedanta has said that it has cleared all its debt obligations for the ongoing quarter, which were estimated to be $1.7 billion. It also said that it has repaid bonds worth $1.4 billion that were due in May and June, reducing its gross debt to $6.4 billion from $7.8 billion at the end of March this year. In more news, the government has reportedly declined incentives to Vedanta Foxconn semiconductor joint venture. Patanjali Foods on Wednesday said that its promoters plan to sell shares to institutional investors in June through qualified institutions placement and offer for sale for dilution of a 6% stake to meet minimum public shareholding norms of 25%. At present, the public shareholding in Patanjali Foods stands at 19.18%, which needs to be increased to a minimum of 25% to meet the minimum public shareholding norms. According to the rules, it is mandatory for a listed entity to have a minimum public holding of 25%. Go First strikes back as the interim resolution professional of Go First has submitted a 6-month revival plan to the DGCA, saying that it is ready to resume operations with 26 operational aircrafts and 400 pilots on its rolls. The airline also told the DGCA that oil marketing companies have extended their support to help Go First. The revival plan also cites support of 15 of the 20 major travel agents with regards to ticketing services. In other news, the holding company of Aditya Group, the Bombay Burma Trading Corporation, has fully provided for its exposure to bankrupt Go First airline and made a provision of 1,865.66 crore rupees for 2022-23 as regards to its investments in Go First. Meanwhile, a Mauritius-based Aditya Group company that together with its affiliates indirectly holds a stake in Britannia Industries could take centre stage in a face-off between Go First and its bankers. The consortium of PSU banks funding Go First believes that collateral provided by Mauritius-based Leela Lands for the loans taken from Deutsche Bank is disproportionately higher compared to what was transferred for their loans. The lenders have also not allowed the group to use undrawn funds to fly again. And that was all about the corporate world. Moving on to this week's big updates from the startup world. Let's find out which are those startups. First up, Byjus. Creditors to Byjus have reportedly pulled out of negotiations with the educational technology giant to recast a $1.2 billion loan. This is posing a new setback to India's most valuable startup. According to a Bloomberg report which has quoted sources, the talks were called off after creditors moved court, accusing the firm of hiding $500 million of funds raised. Lenders can now sell the term loan B securities of the firm as the restraint that came as part of the negotiations is lifted, according to the report. Byjus has to pay interest on the loan by June, and this is a new challenge for Byjus as the company had proposed to rework its debt by increasing the interest rate on the $1.2 billion term loan due 2026, according to sources. Process of reduction in the valuation of Indian startups by foreign investors continues. The world's largest asset management company, BlackRock, has cut the valuation of edtech startup Byjus by 62%. BlackRock has reduced the valuation of Byjus to just $8.2 billion. Apart from this, the fund management company, Fidelity Investment, has reduced the valuation of social commerce platform Meesho by 10%. Earlier, the valuation of Meesho was estimated at $4.9 billion, which has now been reduced and fixed to $4.4 billion. Earlier this week, US-based asset management firm Baron Capital Group had reduced food and grocery delivery company Swiggy's valuation as well by 10% to $6.38 billion. This development comes weeks after it was reported that Baron Capital marked down the Bengaluru-based company's valuation by 34% to $7.1 billion as of December 2022. Apart from Baron, US-based Invesco also slashed Swiggy's valuation to about $5.5 billion as per its recent filings. And amid the crackdown on illegal lending apps in the country, Google came out with the new policy which prohibits apps from accessing sensitive customer data. Google's new guidelines for personal loan apps is aimed at safeguarding the interest of the users and fostering responsible lending practices, which came into effect on May 31st. This comes on the back of Google tightening its personal loan policy for apps on Play Store after increased instances of unethical recovery practices by digital lending apps. Starting May 31st, digital lending apps on the Play Store will not be allowed to access the contacts, photos, videos, call logs, external storage and precise location of the users. This comes on the back of Google tightening its personal loan policy for apps on Play Store after increased instances of unethical recovery practices by digital lending apps. Additionally, Google has asked apps to complete the personal loan app declaration for India and provide necessary documentation to support the declaration. For example, if the firm is licensed by the Reserve Bank of India to provide personal loans, then they must submit a copy of the license for review. The tech giant has also released a declaration form for lending apps from India requiring specific disclosures. Pharma was supposed to raise equity of around 1,000 crore rupees linked to its burn rate velocity. It has failed to do so after trying for a year and postponing its IPO. Negotiations are on to restructure terms or opt for capital raise. Goldman Sachs owns all assets as collateral. The unicorn had borrowed 2,280 crore rupees from Goldman Sachs in August 2022 to pay off an earlier debt. Pharma had hoped to pay off 2,000 crore rupees of its debt from the proposed IPO proceeds of 6,250 crore rupees. Pharma is said to be negotiating the terms of the loan to either restructure the debt or raise equity funding. Tech upskilling startup Scaler has acquired a Delhi-based edtech platform Pep Coding for an undisclosed amount, and this comes across the acquisition is aimed at further ramping up growth and support across various business units, including strategy, product design, B2B enterprise operations, and instructor organization Scaler. This is also the fourth acquisition for Scaler after Applied Roots, Coding Minutes, and Coding Elements, where the other edtech brands acquired over the last 2 years. With that, it's a wrap on Companynama this week until we meet again next Saturday. But to get daily corporate updates, watch our daily show, Corporate Central, Money9's daily show on corporates and markets. Have a safe weekend and don't forget to tune in to Money9.